What is the fundamental secret to trading success? Any sort of trading, whether it be you selling cars or houses or apples, aeroplanes, or whatever it is, the secret that any businessman is going to tell you here is to buy it low and then to sell high. So immediately us forex traders are faced with a massive problem, because it's easy when it's a product like Lego or a car or something tangible, because the prices are fixed differently in the forex market. So buying low and selling high for something like a Lego set is easy, because throughout the year, if a box of Lego, those toys, blocks that you build, if the price of that was $100 throughout the year, and then comes Easter time, you get a discount of 25%. And then now the price is $75. So now you will jump into buy, because you know that the value of the Lego is $100. You know it's a good price at 75. And then the year goes on further up, the price returns back to its usual price of $100. Then you feel very, very good that you've got this thing for 75 bucks. Then comes Christmas, you get a discount of 50% now. So you still feel better than the guy who's bought it for $100 throughout the year, but you feel much better than the guy who's bought it for $75. You see what I mean here? You can judge as a consumer what the fair value of a product is. And the product's values constantly goes up. If you look at a brand new car, prices of a brand new car back in 1990 was less than what the cost of a brand new car is today. Gold price since 1990 or whatever, prices has constantly gone up. Commodity prices has gone up in value. Anything tangible, anything that you can add some real value to, it goes up. So you're buying low now if you are willing to keep this thing up, for years and years to come. But we as traders, we buy and sell in between. When it pulled back at this 50% discount or 25% discount, we start to buy, and we sell it when it gets past the fair value. But it's very difficult to find fair value in something like a fiat currency, like dollars, euro, any currency. Very difficult. Say, for instance, the Lego cost $100, and then the company Lego decides to flood the market with their blocks. What's going to happen to the price of Lego? If they're flooding the market with Lego, there is an oversupply of Lego. The price will come down. That is basic economics. The father of economics, Adam Smith, he's ruled that in his demand versus supply curve. If there's a hell of a lot of supply, the price of the product is going to go down. So flooding the market with a product makes that product go down in value. But can Lego practically do this? Are they able to flood the market unlimited, without any limit? No, they can't, because they have their costs involved. There is a limited supply of plastic. There's a limited supply of human resources. There's a limited supply of everything that they need to make this block of Lego. So they are unable to supply the market and flood the market with Lego at any particular time. What I'm getting at here is that the forex market is a completely different market. The people in control of this market are the central banks. They are able to flood the market with currency. This is their job. They do this. This is what the central banks are there for. They manage the demand and supply of a currency inside a country so that they can then control the inflation and also the interest rate. So this is what they do. Now, the difference between the Lego company and the Reserve Bank is that they can do this unlimited, without any limit. And then they call it quantitative easing. They flood the market. They print money. So if there's an issue with inflation, they flood the market with money. Here's some money. Let's make it cheap so that you can start spending, hoping that the inflation goes up. Or they remove money from the market, make money more expensive. Interest rates are high. This is the market manipulation from the central bank point of view. So the issue with a set of Lego is that we as a consumer, we could look back and we could see what happens on Christmas Day with the price of Lego as compared to the price of Lego throughout the year. What happens on Black Friday to the price of Lego when it's Black Friday. There's a sale and there's a flood of consumers. There's a flood of demand for this product now, irrespective of what the supply levels are. Everyone wants it. Now, the only way that a forex trader, a currency trader, can ever know how to make money in this market is to buy low and to sell high, the same like any other product, but it's more difficult for us. The only tool that we're going to have to help us, to guide us as to whether a price is low enough to buy or high enough to sell is with historic support equals resistance. But they are not made equal. The support equals resistance is not equal. Some levels are our Easter levels. They're giving us a 25% discount. And others are going to wait for that Christmas Day because they know there's going to be a 50% discount there at that level. You see where I'm going with this? The levels are not equal. There's going to be more demand for a product on Christmas Day or your Christmas sale because they are expecting a better discount. If this on top here is a level of importance, it's a level where prices used to react off on. And prices are coming at a very strong pace up toward that level. And then there is people that are able to move this price down. They didn't stop that price. They actually moved. They were so strong that they were able to push prices all the way back down here. What can we say about these guys here who were strong enough to do this in the market? These guys here, in the face of this massive move up, were brave enough to not only stop this train coming toward them, but to actually turn the whole thing around at back to this level here. So this becomes a strong level. This is our Christmas period here. This is a sale. This is a massive sale. They're expecting 50% here. Whereas on the other hand, if we have a level here and prices are coming that strong into the level and we have that little bit of a pullback. This year is our Easter, guys. The sale is only 25% here. They were strong enough to stop the market, this massive train going towards them. But they weren't strong enough, like these guys over here, to actually move the prices into this level here. So what can we say about the level here? And what can we say about this level here? If you are an aggressive trader, you're going to take that level. If not, you're going to take You're going to wait for that level. So what you were thinking about this level versus that level. So depending on what sort of a trader you are, that will depend on whether you take this trade or not. So you are not wrong to take a trade at this levels. You're not wrong to take a trade at this level here. Just do the same thing that you always do. Take the trade there and then, drop your risk or something. Because if you used to taking a trade here, then it's against your nature to leave that trade. It's just not you. But what you can do, reduce your risk at the level and then also take this trade. Now we have an example that I'm going to go through later that covers this, that actually has a live example of this on the chart. This is the euro versus the dollar. Now we have a beautiful setup here. This is the 15-minute. We have a setup. You have your higher high here. It's higher than that point. Yeah. Let me just show you this. This is also something that that comes up a lot. You have a high price here, and then here you have a higher high, right? So that high corresponds to that, and then prices goes up. It makes a higher high, which means it's not divergent. It's going up. So we don't bother with that anymore. We concentrate on this new high here. That's a new high. So this new high comes down and it makes another high here. So now we're even getting a higher high. But then at the same time, we're getting a divergence on the RSI. So now this becomes a setup. This is the 15-minute. And that there is some sort of a level. This is the exact same drawing. This is the euro dollar, and this is the 15-minute chart that we were just talking about. This here is the setup. We have our higher high, we have our RSI coming down, and this is a level on the 15-minute. If you look back here, you can see prices has been respected there and there. Now notice what happens at the level. This here is our level from the daily chart. This is a level on the 15-minute. Now the last time prices got up to this level on the daily, this was the reaction. Look at the massive bars here. This is our guys that were waiting on that big 50% discount on the price. Remember that with support equals resistance, we are trading currencies. The only way that we can ever know or assume that prices are at a fair value is when we look at the historic support equals resistance. We don't know what the real true value is because the central banks would flood the market whenever they feel necessary, and we don't know when that happens. So it's not like a normal product. The only way we can know that a product is, or that the value of the currency is now at fair value, or we should now start looking to sell, is we can only assume the support equals resistance here. So this is our daily support equals resistance. And then we have massive bars coming up and down here. And then on our 15-minute, we have these types of bars happening. So we have our resistance, but look at the action here on this side. There's a much bigger inflow of sellers coming into the market here because of what happened in the past. If we look even further back, there's another one there. There was a stop hunt in that area. Every time prices gets to this area, it seems as if we have massive selling. And then this is also a level of importance. And then we come slowly back into the area. And then we get our divergence there. So we will get our traders who trades here. It's a valid setup. It's got your RSI and everything. But the level of importance, this is your Easter, guys. These are the ones waiting for the 25% discount. So now they have their 25% discount, and then look at what happens here. If we just go slowly, 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 slowly. Your setup prices comes down slightly, and then it goes all the way back up again. And then here we have them taking some profit off the table. First comes down before it goes up. There is some profit to be made with that little level there, 30 pips or so. But the main level has not yet been respected again. Remember, this here is our daily level from that point up there. Prices comes back into that level there. So now this is the real area where you should be looking to trade from the main, at the main levels, the 50% discount levels, the Christmas period levels. You get your RSI divergence in this area as well. And then sometimes you don't. Sometimes you don't get a setup and you've missed this one. And you think, oh my God, I've missed the trade here. It's gone down by 30. Then you put your entry here and your stop loss is here. And then prices immediately goes back up against you. If you trade this, then trade it in the same way profitably all the time. This could have worked just as easily. Yeah, it's a statistical game. But for me, as far as my testing has gone, it works better at the major level. So now here again, you feel quite happy that you've got a nice little trade going, right? You've gone down and it's gone down 30%, 20 pips. And then look what happens. It comes all the way back up to your level again. And then you're feeling uncomfortable because prices has gone all the way back up. But just bear in mind that you're at a good level on the daily based on previous history. Look at the massive candles, the sale happening, lots and lots of sellers coming into the market at that point. So historically, that's the only tool that we really have in this game is the historic support equals resistance. If you choose this, then you need to manage it differently. And then this is our normal bread and butter trade here. And then that goes. And then here you're also feeling very uncomfortable because prices has almost hit your stop loss. But then you are very happy. Here you took your profits. And then we have the support equals resistance versus the dynamic support equals resistance. And this one I'm going to show you back on the chart again. The euro versus the New Zealand dollar. This is the daily chart. So dynamic support equals resistance versus the normal static one is this here. Prices comes down, it creates a level of support. And then your dynamic support is this bottom line here of the envelope. So it follows price quite closely, depending on your deviation. So if we look at all of this here, this is a support level, and then prices has gone up and it's gone up all the way back to a resistance level. So this was a very important level here. However, your envelope, there was no divergence or not divergence, there was no excursion beyond the mean at that area. So when this trade actually worked out for you, you're feeling again uncomfortable that you've missed that trade. But you shouldn't be bothered with that. You should just look at another currency pair or wait until this happens here. There's an excursion beyond the mean, so now you take it all the way back. What this does, what the envelope do for you, it helps you decide whether you are interested in a certain level or not. It's just an extra confirmation. So this is definitely a level. It's been proven here by price, irrespective of the excursion beyond the mean or not. It was a level because when prices came back down, it did go all the way back up again. It has gone up. It reached the next one. You could have looked at this one and said, this is an excursion beyond that mean, and it traded all the way back down. Then here's an excursion beyond the mean. I'm going back up to there. And then here again to there. So this is just a help. So we have a static support equals resistance, and we have dynamic. So you decide whether you want to take dynamic and the static, or just the static, or just the dynamic. It depends on your style of trading and your testing of support equals resistance. For me, I really feel much more comfortable when we have both, a confluence of ideas here. This does help, but it's not a complete necessity. As you can see here, trades do work out when it gets to a level. So how sure are you that this level works? That's the question. How sure are you that you don't need the excursion beyond the mean? Because when it goes up and it comes back down close to here, will you feel comfortable, or will you say, oh, it wasn't, there was no excursion, so that's why it's not going to go all the way back up? Or are you just going to take it on the merits of the level itself? But these are questions that you need to test. You need to find out for yourself whether you take these trades or not. And another thing is, when the trades don't work out, don't start jumping around looking for why it didn't work out, because it doesn't work out all the time. What you need to do at the level that you are at is find out how many times it works when I do that. That's a strategy. It's not that it is not working. You don't know what is not working if you haven't tested it for a decent amount of time. Oh, what did I do wrong? You might have done nothing wrong, because one of you have taken this trade here without the excursion beyond the mean, and then the other guy would say, no, I didn't take that trade. But then the guy who's has taken the trade, he'll start now never taking the excursion beyond the mean, but he'll always have at the back of his mind, as prices goes against him at this level, he'll always start thinking, should I have taken this? Then you are going to deviate from your strategy, and you're not going to perform in the same manner as you always do. Then you won't have statistics to back yourself up, which means you will always start asking what's wrong. There isn't anything wrong. As I mentioned before, for this price to move up, we only need one guy who's willing and able to buy at this level, and he wants to push it all the way up there because he thinks that this year is fair value for this currency based on that. We don't know what is in 250 million people's minds, let alone the next one guy. Don't know what he wants to do. So all the players in this market here decides whether this is fair value or not, based on only what they see here in front of them. If you feel what you see is enough in just a level without the excursion beyond the mean, then practice that. Then write in the group, I've been using without excursion beyond the mean, and it's been working for me 70% of the time. Or I've been taking the excursion beyond the mean and it's been working 80% of the time. So then you make up your own mind. Oh no, I'm going to wait. I'm definitely waiting for the excursion then. It's logical. Or it's illogical. Look at the trade I missed. But you need to constantly do that same thing. Now, this year is level magic. I'm going to use the Australian dollar versus the CAD. So I've hidden this section over here. And I've drew in some levels here. Let me show you. So this section over here is invisible. So we have 1, 2, and 3 sections. This is the daily chart, which means this is probably a month apart here. So level magic works like this. So you take about 3 columns away from where price is. This is where price is trading at the moment in this level here. And then you draw a level across there. Because this was the high. No ambiguity. That was the high of this month. Prices hasn't gone higher. Anybody can see that. We know that's a level, but we're going to ignore that so that we can remove a little bit of the subjectivity of the whole thing. And then the lowest that it's gone is around about this area here before it closed in that month. And then for the second period, this was the highest point. And the lowest point was there. And for the third period, that was the highest that prices has ever gone. And roundabout, this was the prices level that prices has reached. So we have very few levels to play with here. We're taking the high and the low. We're taking the high and the low, and we're taking the high and the low. You can also take the open. So you have the high, the open, and the low. You can also take the high, open, low, and close. But then you're going to have more lines. If you look at the previous one, this is the high there, and that is the low there. This is the high there, and that's the low there. This is the low, and that's the high. So I hope that was clear there. So these points here are just the high and the lows of the period. And in this case, it's the daily. You can also do this on the 15-minute or any chart. So that's your high, that's your low. So what can you assume here? You can assume that prices could play in this level. And if it breaks that, you could assume it's going to go there. And that's just based on the highs and the lows. The highs and the lows and the highs and the lows of each of these sessions. That's a session there, that's a session there, and that's a session there. So we have 1, 2, and 3 sessions there. Now, because this price is coming down, we would like to trade short only. But because we're not bothered with that right now, we are going to trade this inside that range. And our levels were objectively identified by means of a high and a low, or a high and a low and an open and a close of a particular session. So we know it opened there and it closed somewhere there. So we have a level there. This is trying to remove some of the subjectivity and trying to keep it as objective as possible where levels are concerned. Now, this is I'm giving you this to help you with levels. It's helped me in the past, and I sometimes use this technique to help me with where levels, where price could react. So let me show you the hidden section here. there. So prices has reacted in the manner that it's done historically in this year was the hidden one. Right, this area here was the hidden section. So this was the low based on a previous lows there. So prices reacted there, and it reacted there, and it reacted there. And then it's broken through there, and look where it's returned back to that high. So if you like using that to determine the levels, if you're finding it difficult in choosing good levels, then by all means try using this level magic. It's 3 periods. It's 1, 2, and 3. You can obviously go back more, but what is the benefit of going back that far if prices are trading here? Yeah. So if we are trending, we don't really have to look at those. So we can, the 3 before the current level is enough. Let me know if that is of any benefit to you where levels are concerned once we open up for questioning. And then we have our pair here, the pair that we've been struggling with for a while during this week. This is exactly what has happened in the examples that I've been trying to show you. So prices are coming down into a level of importance. And where is this level of importance? It's based on this area here. If I delete this area here is a zone where there might be some demand. So what we're going to do is we're going to drag this across. This is how I draw my demand, my support and resistance. So when prices hit that level, I'm not interested. A lot of guys are not interested. It has come into the level of importance, but we're not that interested because we are not, there's no excursion beyond the mean. But as soon as prices hits the level like this, there's still no excursion beyond the mean here. But the more aggressive you are, the more you're going to look at this as a good level. But the thing is, if the bar that comes down into the level is so strong, it just, if we could assume that because of that strength in that level, it looks as if prices would like to retest a previous historic level. And then this would be our section 1, 2, and 3. Remember, if you want to draw those levels, I'll draw mine there, and I'll draw the lowest low here on the previous. Now look at that confluence there. So this is a more important level then. Plus, we have a massive bar going down. So why do we need to look at this level? Only if you're very aggressive, you can look at this level and risk lower. There was no excursion beyond the mean. The bar comes down very strongly toward a level that's definitely more important. We can see that that's more important there. Based on the confluence there, based on the way prices reacted off that level in the past, and just the way prices are coming in with this massive bar coming down. So firstly, there's no excursion beyond the mean. The level is a mediocre level. It's in between the big one here. It's in between that. It's a middle level. Now here you get an excursion beyond the mean. And it's inside a level. Can we see that there's an excursion beyond the mean there, and here there isn't? Now, why are my settings like this? It's because as every time there's a turn in the market, every time there is a big turn, there's an excursion beyond the mean. Every time there's a big turn, there's an excursion beyond the mean. Excursion beyond the mean. So this is why my settings are like this. It's not going to be prudent for me to narrow my settings here, because it has respected that every time there's a move, there's an excursion. No excursion, not going to take that trade. Not for me. But there was some profit in there, believe it or not. There was some profit in there. I'll zoom into the 15-minute for that quickly. But then I just want you to notice there's an excursion beyond the mean there. And we are in a level that is more important than this one. Yeah. So if I drop down to the 15-minute now, yeah, just notice this area here. This is around about the 4th, I think. Now, I know the area very well because the guys have taken that trade in the room. Now, here it is somewhere here. Yeah, this is the one. So prices are coming down, and it is at that area. And then we have a divergence. So we're putting our entries above that level there. This is the level on the daily that is the mediocre level. Well, not really, just the, I don't want to call it mediocre because it is a level. But there was no excursion beyond the mean. And you could have made, I mean, this could have shot up to where you wanted it to go. Yeah, it could have been a good winning trade. And then what we have is our entries here. And then unfortunately, this is where we had to look at taking some profit off the table. Unfortunately, because prices has come all the way back up very fast. Yeah. And if we look at the divergence as it's coming into that midpoint there, it doesn't look very good. It doesn't look very good. We're making higher highs here. And the divergence, the area here is just not giving us strength. So close the trade here. Unfortunately, it's not that your risk to reward is bad and all that. It's the price action is dictating to us that we cannot stay in this trade anymore. You've got so many reasons to get out of here now. Reason number one is because the level wasn't the best one. Reason number two, there was no excursion beyond the mean. Reason number three is because it's already hit the midpoint of the envelope. If you go back to the daily, this here is that trade. There's no excursion, but you take the trade and then that's your midpoint. Unfortunately. And then at that midpoint on the 15-minute, you can see that the clues are there. The clues are telling you that you should be getting out of this trade here because this is not doing the right thing. It's just not doing the right thing. At a level where you're supposed to be looking, you're looking at this midpoint, and this is what happens at the midpoint. What happens at that midpoint. Get out. Doesn't matter what your risk to reward is. The price action is telling you differently. Get out. This is what I mean by watch the midpoint. Another reason to watch the midpoint is because it's trending on the midpoint. Prices are coming towards it, testing it, and not breaking through. It's trending along the midpoint again here. It's at the midpoint right now, but prices are looking much better towards that midpoint. Let us go to the 15-minute and look at what happened at the more major level. This here was the level that the aggressive trader would look at. No problem at all. Yeah, no problem. But when it comes to the midpoint and you see something that's not looking good, then do something about it. It comes down into the much more important level. Now, there is no setup for the beginner strategy. Yeah, this is a more advanced one. There is a definite setup there, but no, not the beginner strategy. But again, if we look at where prices are now, yeah, look at what prices are doing on the daily. Back at the midpoint. We are at the midpoint right now. So what are we doing on the 15-minute? Do you see there is some barrier here? There is something happening there. So if there is a stop loss, then there's money there. If that is entry cheese, then there's money there. If this is entry cheese, then there's money there, which means that they want that to take out those stops. So then they could either continue and go, or they stop on that area and go back down. But do you see it happening in a midpoint? So this is what I mean by watching. So, okay, so you are in the trade somewhere here now. So what do? You watch to see what's going on with the price action. Is RSI going sloping downward and its prices are moving up? Are we breaking through it convincingly? What I'm saying is just have a look at what's going on there. I'm going to open this up for any questions. I see there are still some guys in there. Okay, it's open for any questions, guys. I think the microphones are open.
Hi, Rustam. Yeah, no, that makes... you hear me?
Yeah, I can hear you, Andy.
Oh, sorry. Yeah, that makes a lot of sense. That would explain B's stats when I was analysing his stats, why he was coming out at terrible risk rewards. Okay, so that clarifies a lot for me then to himself. That clarifies a lot of looking at that midpoint and studying the RSI to actually justify remaining in the position. And if it's not justified, then to exit. So yeah, that should hopefully help a lot for me for next week, rather than just holding on to that. 1.25 because it's not justified otherwise. So no, that clears up a hell of a lot.
Yeah, if price action is determining that this is an important level, then you need to act, because we are not relying on these dynamic support and resistance and blindly. We are looking at it and we are just reacting depending on what the actual price is doing there.
I suppose that the way to look at it is, as soon as you get to midpoint, ask yourself the question: are you justifying to stay in this position? Is the indicators and the action what you expect to remain in? If not, then just close it and look for the next trade.
Yeah. And do you guys have a lot of levels on your charts and you're confused about which ones are important and which ones are not? Or are you okay with your levels now? Because the thing is, when we are at a level, when we are at this point here, we should assume that it's going to go all the way back down. That is my target there if I'm trading here. Yeah, that is my real target. I don't want to get into this trade if my target is not there. So you can only do that on the daily. Like this might be a nice level, but then look where my initial target is. It's just there. So it's not worth taking the trade there. Do you understand? So this is a level, yes, because it's based on that. Yeah? But we're
Actually,
looking at the extremes.
Sorry.
We're looking at the extremes here. There. Those are all that there are. Now, we can look at that minor level. We can look at various levels in between. But then do that on a risk that is lower. And you know, do it like what you did on this Aussie CAD, not Aussie CAD, on your other trade, like where you minimize the risk. Do it that way.
Yeah, that makes sense.
Yeah.
Something that we haven't touched on now, we're all used to sort of drawing our levels, fresh levels off previous. Now, on that second zone, second from the top, that zone there, I don't think we've really discussed that. Now, have you drawn that level based after you've seen that last day there, the last day to your right?
Just 1 second. Let me do this. I'm gonna delete this. Do you see what's happening? Do you see what I do here?
Okay, so you've got that zone, that top zone there, based on that daily high, yeah. Now that next level,
let's look at 1, 2, 3. Which
two,
zone?
Yeah, that makes sense. Okay, so I'm looking at this second horizontal line that you've drawn, the zone. Now, have you drawn that based on the high from day 3, or have you carried that zone over from day 0, if you like? You've not written it on there.
No, the way these zones are drawn. Remember, this is just only a technique. Yeah, if you are struggling with zones, this is the zone here. This here is your current zone. This one here. This is my current zone.
Okay, so that second line.
That's current.
That second line down. That zone has got nothing to do before day 1. Yeah. So that zone has got nothing to do before day 1.
Would you have this information in front of you at all times before your current information?
No.
When we are trading here, do we know this?
No.
This has happened.
So what you're saying then is that second zone is carried over into this new area of 1, 2, 3 from the previous setup. You've carried on drawing that, extending that line.
Yeah, you do. This line is drawn because this was the high of this zone. So now I draw that line.
Yeah.
And then you can draw it to the back if you want, but it doesn't really matter. You're only concerned about the future.
Okay, so that second. I'm talking about the second zone down from the top, the horizontal. Yeah. Okay. So from when did you start drawing that line?
I could only draw this line because it touched there.
Right. Okay. So you've got it from that point. I wasn't too sure if you was bringing that line over from which would effectively be day 0 and day -1. I didn't know if you'd had your zones marked from there and then bringing them over into 1, 2, 3. Okay. So you are just drawing fresh zones when price action.
Yeah. It's
gives
based
you that
on
information.
it's based on a demand and supply type of a guy trader.
Okay.
Yeah. The assumption is that prices has come up to the level here, and that there was so much supply in this area here that when they drop down, They couldn't get their orders filled in, and there must be some orders left there. That is just the assumption.
So that particular point in time is when you've drawn that zone all the way across.
Yeah.
Yeah. Okay, that makes sense.
So that is just a technique that we could use to help you with levels. It's also going to keep you more conservative with your levels. You're not going to have too much levels, because the maximum amount of levels you're going to have, if you take the high here, is that one, and then the low, then that's 2 lines, and then this high here, and then that low there, so that's another 2, and then you're going to have 6 lines in total. And if you're going to take the open, high, and close, then you're going to have 4 lines there, 4 lines there, 4 lines there. Do you know what I mean?
Yeah. Okay, so that third horizontal that you've drawn, you would have drawn that third horizontal down on day 2. You've had that information.
I would have, so that I would have there.
Yeah. So okay. So on day 3, we've made new highs, and it's gone straight through that third horizontal line. Yeah. Is that now? Yeah. Okay. So is that now no longer valid?
No, it's valid. It's valid.
That's still valid. So you are in fact still carrying that. You're still carrying that line forward. Onto the right hand side of the chart. Okay.
The assumption is that 3 periods. There's always going to be some sort of value still in that.
Okay.
You can try this as a technique to help identify which of the zones, which of the periods are, which are not. Do we have any other questions based on anything we've discussed here? Mark, do you see any type of questions?
Ok, bon. Cette personne-là vient
Okay.
je sais pas si tu es avec nous. Bonjour. Donc j'ai récupéré ces infos de ton mail. C'est pas très clair pour moi concernant le contrôle de coffret JI. Certes, c'est une parenthèse vite fait. Depuis Tech, j'ai compris qu'il y a une DDM qui est en cours.
Russ, who is this?
Yeah, I think I've muted this.
Okay.
Yeah. So, do you have any other further typed questions there?
For me?
Yeah, because I can't see the messages here.
There's one. How many days in one period on the chart, on the daily chart?
It's going to probably be about 30 days, because when you do this, do you know how to get this up, the periods? Let me just do that quickly, just to get everyone on the same page here.
And then does the envelope tools allow you to determine where the midpoint is without manually calculating?
Yeah, I'll show you that quickly. So if you go to the daily chart here, and I just template pure training. All right. So when you right click on your chart and you go to common, right? When you right click on your chart and you go to the properties, and then you go to common, you have colors and common there, and then you say show period separators, and you click yes, then you're going to get these period separators. So if you're on a daily, then the approximate period here is going to be a month. As we can see, 26th of September up until the 30th of October, it's approximately going to be a month worth of information there in between that periods. So if we look at this example, we got our first period, second period, and third period. So it's very easy to see here that there is going to be an important level. And then where's the lowest point that prices has gone in this period? It's this one here. And then if we come to the next period now, where is the lowest period or the lowest where price has gone? It's there. And then the next period is, this one, it's right above here. So we don't have much levels here. If we're only going to use the high and the close of a session, then we only have those. So what we need to do now is wait until prices gets all the way back up to there on a few pairs. So that level plus the excursion plus your setup should equal a good trade. And the other question was about the midpoint on the envelope. Yeah. Let me know if there's any further questions. Yeah? I'm just going to do the midpoint of the envelope. So the setup on the envelope is you go to the properties, and if you put 5 period there, that means you're going to have as a midpoint a 5 period exponential moving average there. So if I do this, if I add a moving average, then the midpoint is a trend moving average, and I say that I want to put a 5 period moving average there, and then you will see that no line really comes up because that is my 5 period moving average. So the midpoint is a 5 period moving average. That's what it is. So it's a very fast moving average. So when we say it's a lagging indicator, yes, it's a lagging indicator, but it's it's not that slow.
Rustam, just a question. Why do you? I'm getting mixed results of setting this envelope using exponential or taking it off. I still can't decide which one I prefer, to be honest. What made you come to the conclusion to use turn on the exponential on the envelope?
You mean the midpoint?
Yeah, your settings on the envelope.
Can you see that that's the midpoint? Does it look like?
I can see the midpoint. Yeah, but I'm talking about where the settings box where you're putting in the length of 5 days.
For me, a trader much better than what I am has come up with that value, and I stuck to that value. Yeah.
Okay. So you've got the option of basing this envelope using exponential or not using exponential.
Oh no, an exponential moving average is it takes into consideration the prices most recent, and it removes the noise that a normal moving average would have.
Okay, yeah, I keep flicking between the two. I can't decide which one I prefer.
No, fair question. Look, the thing is, for me, that moving average works as a midpoint. I mean, if you look at the way it's being respected here, it's seriously great. Do you see what I mean? Right here, it's being respected.
Okay, I've not really looked at when I keep changing, I've just been looking at the outer bands of how that's. I've not really studied the difference on the midpoint actually, which is what I guess we're sort of half of why we're using it. So
let me just have a look here. Is any clear?
Okay, that would make sense. I'm just looking at a couple of trades where it's come up halfway between zones. Yeah, using exponential, I would probably be looking to get out, whereas taking it off, I wouldn't have been alerted, and then prices just come back down against me again. So no, that makes sense.
Yeah. So if we add here just the moving average, the exponential 5 period, I wonder why it doesn't come up there. Is it a different color? Just 1 second. It's probably a different color. Mark, is there any more questions there? So you said black.
Yeah, are you able to see the questions now or no? Because I can read it out.
Yeah, just read it for me. I can't see it.
Yeah. On the Euro Aussie chart.
Yeah. This one.
Yeah. Is the most current level a valid level to try to go long?
Yes.
Or would you need a confirmation at that level?
You mean just the level without the
he referred to the most recent one, meaning that
yeah, this is quite a good one actually, because I posted this in the chat room the other day. I could see what the guy's asking, because if you're drawing your zone on that Euro ALD, you've got, if you're taking it from that pin bar, see that's 100 pip zone. Yeah, so you could either draw it like that, or you could take that zone and make it smaller by drawing it just literally underneath that engulfing candle, just to the right of that pin bar.
See, so
you've potentially got two zones there.
I have a rule for that too. If that zone is more than 60 pip, in terms of the width, I do not take that trade. Does that make sense?
Yeah, that's quite. Yeah, okay. So that's what I thought. I thought that was like 100. That's 120 pip zone. However, you could make that zone smaller. If you used to make that zone smaller, and then just bring it up to the pins, take that up, drag it across to the left. So see the engulfing. That's it. So so if you used to take that, that's right, and then you can draw another level going further to the left. That previous low, no, you'd leave that level as it is. That's fine. Yeah. Now draw another zone on that loan from that zone in the mid period. So the mid period of the screen. Yeah, no, yeah. Left a bit. No, left a bit. Left a bit. Left. Left. No, go down. Now down. Down. No. Go right. Back right.
Mm-hmm. Yeah.
Right. Now go down lower.
Oh, that's
now that's it. Now draw. No. Leave that zone as it is.
Oh, the zone as it is. Oh, you want another?
Now draw a new zone from the very lows there. Then from the take it lower. Start. Yeah, so I would draw it a lot lower than that. You've got it too high.
Rustum. No. That's not what he asking. Close that.
Take it off them very lows of the pins.
Do you want to
low bars?
Andy, do you want to share your screen?
Just delete that.
Yeah, can do. Yeah.
1 second.
All the way to the bottom when I send.
I'm gonna let Andy just explain it to us himself. So which one should I use? Andy PC, yeah, APC.
Andy PC, yeah. Just clean up the chart.
And what's his name always says is also get rid of any porn.
Yeah. I'll close my Razzle website.
Andy, just check if you are able to share screen, yeah?
Where am I looking? Share menu. No. Not quite sure.
There's a plus button on the top there, and then you should see share screen.
I'll click the plus button. The plus button says test and surveys, YouTube player, whiteboard, shares. Oh, share screen. Fair enough. Okay. Okay, so this. So I've drawn it from these pin bars here. So originally I had this zone. I thought, well, that's too much of a zone. So I drew one zone there, which is where price is now. And then I've drawn another zone coming back from here that cuts all the way across. So now I've actually got two zones.
As long as you are always doing that and you know how you draw zones, then it's fine. But the thing is that there are obviously going to be guys who are who's going to be different. So the thing is, for me, making this thing objective is the reason I'm taking that whole week as a zone.
Right. That's originally how I planned it. I thought, well, this is going to be, you'd have to pretty much wait for it to go to the bottom. Otherwise, your stop loss is just going to be ridiculous and the risk reward wouldn't be worth it. So then I looked close. I thought, well, actually, let's draw two zones in from the. So we could, with this, by doing it like this now, we've now got a very good area to try a trade with a very, very tight stop.
Yeah. Like I've taken the trade based on a different entry technique in that area, but it wasn't based on anything other than it's hit a zone. And there was a setup, and there's a setup in the zone. So I can get filtered out because there is no setup, or I can get filtered out because there is a setup. However, I wasn't triggered in. Prices wants to go further down and retest the level further down. Either way, I feel comfortable because we are still in that zone.
Okay. Okay, so for me, if I was to take, well, probably missed this trade now. I probably would have done this, half risk.
Yeah, now you don't do it. It's done now. Do you understand what I mean about that midpoint? The midpoint keeps you out of a trade. It was a very good trade, but it's done now. That level is also done for me. That level, even if it comes all the way back down now, it's done. Let me show you.
Oh, really? You would?
I'm not going to take that level because I do come from a demand and supply background where that level is not, it's not as valid anymore. If I feel like messing around and playing a bit, and then I'm going to take it because I'm a human being. I also like to be in trades and I want to trade a lot. But then I'm not.
Okay, so because this is not really a major zone, is it? So if we hit this zone and then it came up and then it came back down again, obviously you would take that because this is quite a major zone. But because this is not a major zone, is that why you would not bother taking it again if it came up and then back down again?
If it comes all the way back down now, let me show you my screen again. Yeah. These sessions, I always plan them to be only an hour or less even. But it always seems to want to go into the 2-hour mark. Can you just stop the share?
Oh, sorry, yeah.
Okay.
Hey, Russ, I'm going to step away for a second.
Yep.
All right.
Okay. Do you see my screen, Andy, guys?
Yep.
So what we have here is the level that has been tested now. So I understand that you know that whole level is the zone, from that area all the way there. So now it's in that area, and it's come halfway down and it's tested that area here. So now my zone has been tested, that zone. So immediately this zone has also been tested now because that is part of that zone.
Okay.
But this hasn't been tested down here. Anyway, the issue is when I take a trade here, what am I actually doing? I'm taking a trade here with a constant thing in my mind that there's a probability that it's going to get all the way back up to this level. Otherwise, I wouldn't take this trade. I don't want to take and leave the trade at half, at the midpoint. I wanted to break this midpoint. Yeah. My idea is not to trade this thing down. My idea is to get this thing going all the way back up there. But if it does come down, I'm not going to trade that level again. I have in my mind that I've taken the profits based on that level already. The guys who's missed this Christmas sale here, he's waited for Christmas for the whole year again, and it's come back here. He's assuming the same thing as me, that the price is going to go all the way back up to here. And if it doesn't, he's not going to try this level again. He wants it to go all the way back down to here, because of what happened in history at that point. Something else, it's gone all the way.
So why are you ruling that out? Because obviously, during the sort of accumulation distribute, we are looking for a lot of touches off that zone. So what's making you decide that, well, actually, I'm not going to trade this zone again?
This is what making me trade the way I do. There's a bigger picture plan in that's constantly playing in my head. Yeah, I use a different strategy when it comes to this, and this is the strategy I'm using there, because we have a trend line there. It's been respected all the time. I can't justify anything unless my strategy on this side of things has changed my mind. So I'm playing around. This is what you're going to do with what we spoke about before. So it's having the holistic view. So when you see me taking a particular trade, I'm not thinking of this. It's like a whole chess game for me. Yeah, the moves ahead of time is being thought of constantly.
Yeah, okay, that makes sense. So you're basically just gonna obey that new smaller trend now, knowing that it's got potential now to make a lower low, respect that trend.
Yeah. So why should I be doing? I'm only going to trade long if it makes sense to me, and that makes sense to go long. And I'm going to trade it short if I get the short setup on the other strategies that I have. Mm-hmm. And then I'll trade this thing short. I'm in this trade to tell you guys the truth here. I'm in the Euro Aussie since forever, since way back, forever. I'm trading it up and down constantly based on the strategy.
Yeah, because that's the one with that's got a long respected a trend going back to 2017, more or less.
Yeah.
If you look at the monthly.
Yeah. So and I trade few pairs so that I can be concentrate on what I'm doing, and you'll see, like, if you decide to stick with the stuff I'm showing you, you're going to see the same thing.
I've noticed that from past experience. I mean, the CAD Chef, for example, this week I rode it all the way down. I thought, I'll do a quick long and then get back short again. And yeah, you do get a feel for the movement of the pair if you just focus on that one pair.
Yeah. So that is it for levels. As far as I'm concerned, I tried in this section to make the levels more objective for you, using the high and the low of a session, and try using only those levels and see how you get on, which means you'd be eliminating a lot of the minor levels in between. Like this week's example, we would have eliminated that trade, the one in between there.
Yeah.
So, and that's all we're doing here. We're eliminating the losses, but by means of strategy, not just because of some willy-nilly thing. There's a practical reason why we are eliminating trades, and we can only eliminate trades once you've definitely tested it long enough. So I actually wouldn't like you to not trade the way you do, Andy. There's nothing that you did wrong this week at all, because it is a level It hasn't gone beyond the envelope there. So
Yeah.
you're testing whether you're going to start taking trades which respects that envelope excursion more. You'll be able to talk about this much better than me if you keep on trading that way. Either you'll say, no, look, I've been trading it that way and it's worked for 100 trades and I'm winning 70 out of 100. But you can't just based on a week or a few days of testing.
No. To be honest, it's the risk. I mean, I keep seeing some good profits and good trades. If I, because I'm just waiting for that risk reward, and I'm seeing sort of 80 pips turn against me, and I'm thinking, it's just it's just so frustrating. But now I'm going to start doing that midpoint, and just basically, I guess what you're asking yourself, when price gets to that midpoint, would I actually buy it at this point?
Correct.
Flip it on the other side, rather than sort of saying, justifying yourself staying in the trade. Ask, would I want to jump on board at this point?
Exactly. So prices are at that midpoint right now. If you jump to the 15-minute, would you want to get out of this trade now? Yes or no? You see, that is the thing. So for me, what's going to happen here now, a clue would be what's going on with the RSI. Are we going down or up? So if the RSI is able to push up and make another higher high, then for me, there would be no reason to get out of the trade.
Yeah.
Is this trending? Yes, we have 1 leg, 2 and 3. If it comes all the way back down here, I'll be concerned. Yeah, if it breaks, then it would mean to me that midpoint held. So I need to start thinking. I need to start. Hey, should I break even? Should I take another trade some other time? Is it gonna, But I'm not just. But do you see there's action in this area though?
So you've got two clues there, haven't you? You've got the RSI, and is price going to respect that trend as well?
So this is what I mean by thinking what to do. It's not that you have a bad risk to reward ratio. No, you don't. Your whole idea was to get all the way back up to the next level, but unfortunately, price was the boss here, which it always is. And you need to respect what price is doing, and you have to ignore your risk to reward. It doesn't matter. The price respects the 5-period moving average. It's seemingly so. You need to act when that happens.
Yeah.
It's just about the trade management once you are in the trade. Look, guys, I think that we've covered the support equals resistance stuff quite nicely. But if you have any further questions, then you can also mention that in the chat. Okay, so thanks a lot for joining, and also you can DM me and message me any private stuff, because I do try and be more involved in the room, but I do first need to see what is going on there first. On your own, what you come up on your own. You've been given a skeleton of which you need to now just build and see what you can come up with. Okay, guys, thanks very much for joining. I'll speak to you soon, and don't forget to trade safely and prosper.
Thank you, guys.